Greece back on the cards. And just looking at the movement on the euro dollar, we're back below that 134 level. The market is nervous, and of course risk aversion is obviously now mounting, and that is net negative for the local currency. Just looking at what Sarah said, 737 the dollar rand at close yesterday. Now we're at 742. Perhaps let's just start on Greece. We know the scenario is that they now need some 80 billion euros to prevent a default. They've got access currently to 45 billion euros. I was also just picking up on another thing that Sarah said there, and that they're discussing a new tax to cover sovereign defaults. I'm sure that's not going to go down too well. But coming back to Greece, your view on how this is going to unfold?
Well, basically, we're still quite uncertain exactly what the bailout package discussions will bring. I was checking a little bit earlier today. It seems the 5-year Greece bonds are trading at over 6% above Germany, which is basically the exact same currency. That basically indicates the risk aversion currently in the market, the skittishness, and at the moment it's very hard to say exactly where we're going to go. We pretty much data dependent, or rather what the decision is going to be dependent.
The impact that it could have on the South African rand, again, it comes back to risk aversion. If we see heightened risk aversion, we could see a significant downside on the local currency. I mean, here, weakness against the US dollar.
This is more a discussion of euro rand as opposed to rand dollar. We typically see that the rand is likely to strengthen against the euro. Against the dollar, it's again very uncertain. House view at the moment is still to see 725 at mid-year, while at the moment we see the trading range somewhere between 735 and 746.
At the end of the year, do you think we're still going to be at a stronger level? So again, 2010.
That's at mid-year?
I know mid-year is 725 on the dollar rand, but is it possible to forecast further out, or are you pretty much leaving it as a sort of an open target at this stage?
No, at the moment our currency analysts are seeing 8 to the dollar at year end and pretty much 8.50. They're actually more bullish on the 2011 scenario than they have been in the past. They actually revised that forecast down from 9 to the dollar to 8.50.
So we know that your view is one where we're looking at a stronger dollar rand at 725 at year end. The risks to the downside, though, in terms of heightened risk aversion, we've got the Goldman Sachs story unfolding. We've got Greece still coming to the fore, and further bailouts needed on that side. Surely there is tension in the global environment, and that ultimately is going to weigh, even if it is on the short term, on the South African rand.
Yeah, there's definitely a lot of tension about. It seems though that the rand is holding up quite well. We actually don't see the rand weakening significantly from where we are now, and there's some serious blowout, and we're not referring now to the Goldman story or the current euro tensions. It would be something out of that realm of
an additional volcano, Big Brother volcano scenario. Is that what you're talking about?
Yes, or some Middle East tensions or something happening in China, that type of thing. At the moment, the world seems fairly stable, if very uncertain. It's, in other words, very hard to take direction, but we are pretty much range bound.
MPC is meeting again in May. What is the market anticipating? Are we going to see another interest rate cut?
Well, the market's busy hedging its best. We're pretty much seeing an indication in short-term interest rates about 50-50 chance of a cut or not. I think most analysts are still on a flat view. However, the market is maybe just pricing on the downside risk of another cut.
And when do you anticipate we'll see the first interest rate hike on the local front? Or is that still some time off, given the fact that we've just seen a cut in March?
Well, the RMB house view is still for a hike possibly next year, first or second quarter. I think a lot depends on when the US hiking cycle is likely to start. So I think our views might be possibly dependent on that as well. But at the moment, it's quite hard to say. We do know that it's been reiterated that the inflation targeting is still of prime importance, but it's just a bit more of a broader way of approaching that the target band.